Good morning. Today is Wednesday, October 25th. The time right now is 11:40 in the morning. And overnight, we have quite a bit of movements in equity market as well as in the dollar. So we start off with equity market. We can see that the equity market has bounced off Tuesday's low, which was at 32,892. And this is largely on the back of a improving PMI, which is the Purchasing Managers Index. Both the manufacturing as well as the services sector appears to have rebounded somewhat over the last month or so. Especially in the manufacturing sector, we can see manufacturing actually dipped into the contraction zone as of December last year, and there was a brief rebound back in April to May, but by June the number has gone back to below 50, which is a contraction zone. So what appears to be last month's number was to be 50, which is a borderline case between contraction and growth. So this is actually a good development as far as the manufacturing concerned, okay, because it has been a doldrum for quite some time. Even the services sector has seen a marginal bounce in a number. Last month there was only 49.9, and the latest number was just above 50. So that shows that services sector is also doing relatively well. Now, when you compare that to the PMI numbers released for the Germany, for Eurozone as well as UK, they are in big trouble because they are obviously contracting. So between areas of contraction and the growth area in the States, of course, the dollars seems to be benefiting as well. And of course, this is rubbing off on equity markets. Now, on top of that, we have earnings seasons. And so far, the earning reports coming in from the big companies has been better than expected. So again, that put a floor underneath equity markets in the next few days. So this is the sentiment right now. I think there is a good chance the market might bounce off the recent low at 32,900 thereabout. Over in S&P 500, we also see a same thing. Now, the market actually dipped to 4,189. Now, remember, this level is also previously what I mentioned to be an area of supply of demand. That level is 4,166 to 4,195, and the market traded low of 4,189 on Tuesday. Actually, give credence to the idea that this area has a lot of buying interest, and the market is bouncing off this level. Currently trading at 4,247 at the close. So this is actually putting a positive spin to equity markets in the immediate future. Over the Nasdaq, we also see a bounce of 14,419, which is marginally lower than the previous low here, seen in September 27 at 14,432. So again, this is less an idea because I was hoping the market would dip a bit lower to 14,244. However, it did not quite get there. But again, this is actually underpinning the market. But by and large, I do expect a bit of a bounce going on, but it should be limited to 15,000 or just above 15,000 before we see another leg to the downside. So this is my outlook for equity markets, for in particular US equity markets. Over in the Hang Seng, we see a bit of a bounce this morning. So the bounce was actually quite robust, up to 17,553. However, as we are speaking right now, equity prices in Hong Kong is retreating back again. So we are almost seeing a pullback about 50% right now as we are speaking. So this is definitely suggesting that overall, despite the positive spin in the US equity market, the Hong Kong market remains a little bit vulnerable. So do watch out for that. Over in the Japanese market, we can see the Nikkei 225 has actually went up to 31,461 this morning in the futures contract here, and this is within the bracket of prices which I do expect some kind of selling interest to re-emerge. That level is 31,436 to 31,736. So we will have to see. This bounce is very tentative. There is still the risk that the market may trade to the downside going forward. Okay. Then over in the dollar, like I said earlier on, yesterday's PMI numbers actually are supportive of the dollar going forward. We can see just before the release of the PMI numbers, the dollar index was 105.15, and shortly after that, the market spiked up 100 points to 106.13 thereabout before we see a bit of a profit taking as we are speaking right now. And this area is incidentally an area of pocket in which I do expect some kind of profit taking. The level is 105.86 to 106.15. So this may see market pull back a little bit before it attempts to trade higher. So we have to watch how this market unfolds. I do note that the pullback from 107.05 has an incomplete three-wave. The low so far is 105.15. Ideal target is about 104.80. So I would still think that there's a possibility market may this dollar index may actually unravel to eventually trade around a 105 to 105.80 104.80 levels. So that would be ideal before the market rally further. Okay. In the principal currency, we can see that the euro dollar has managed to rally all the way to 106.94 before we see a pullback. And of course, this pullback is on the back of very poor PMI numbers coming out from the Eurozone. In particular, the numbers coming out for Germany is a little bit worrying because we continue to see weakness in the Germany markets, and that it will have repercussion for the peripheral economy in the Eurozone. So this is definitely a negative for the currency itself. So by and large, you can see a technical rally all the way from 104.48 all the way to 106.94. So this complete a very neat three-way symmetrical three-wave rally here, and it also ties in with the idea that we probably will see lower prices going forward. Sterling did not quite get to an ideal range. However, the market traded a high of 122.88 last night, just short of an area which I previously identified as an area of supply. That is 122.90 to 123.40 levels. Okay, down the market is pulling back. There's a good risk that the market may actually come down and retest a 121 levels before. I think that because the three-wave rally is incomplete, I do expect a three-wave rally to actually pans out over time. This is what I'm talking about here. If there's going to be a three-wave, I do expect some kind of move towards the 124 levels. Okay, so I still believe by and large there should be some more upside in the sterling relative to the dollar. Okay, and over the Aussie have broken out of a near-term resistance zone. Okay, and it has punched through this blue line here that I've drawn, signifying the immediate resistance, and the market has closed beyond that and traded to a high of just under 0.64, and it's currently pulling back. There's a very good chance it will go back up again later on in the afternoon when London opens. So 0.64 to 0.6430 is still going to be a likely area of target here for me. Nothing very much happened in dollar yen. You can see that market are still wanting to buy dollar yen because of the interest rate differential between the US and the Japanese monetary policy. So we can see that although the market wants to go higher, the fear of intervention has been capping this currency pair here. And if you have nothing to do, don't trade this currency pair for now, because it is not a good time to go in and sell just yet. There is a risk that the market wants punch through 150.16 because there could be accumulation, a lot of buy orders here. So if the market do check out this high here, there's a risk that the market will go into 150.80 to even as high as 152. So this will be a much better area to actually position short if by then we do see some kind of weakness going on there. Okay, but for now, I think it's best to stay out of dollar yen for now. In dollar Canadian, I do expect there was a three-wave rally from here, which went into this bracket of prices between 137.35 to 137.65, and the market high at 137.55 was actually acceptable as in between. Okay, so there's a very real risk that the market may pull back, and if it does pull back, I would love to see a more significant pullback in the dollar versus the Canadian dollars to challenge the 135 levels. So this is still a possibility in my opinion. So do watch out for weakness going in the later half of the day. Okay. And over in the crude oil, we can see crude oil prices continue to decline on the back of a somewhat of easing of tension in the Middle East, because the much anticipated ground offensive that Israel has been talking about has not started. This is on the back of a negotiation for the release of hostages in exchange for energy. So this is something that is going on in the background. So in the event of the step down in tension, although it is temporary, that is also impacting the oil market on the negative side. So we can see the high prices is $89.85 in the WTI crude oil futures to as low as $82.94 overnight. And this is likely to see prices continue to dip lower, perhaps even to as low as $77. Okay, there is the possibility if this thing continues in the three-way pullback, we may see $77. That will be a much better area to actually position long, because the tension in the Middle East is very unlikely to de-escalate, in my opinion, because right now we can see the neighboring Arab nations are basically telling Israel to not execute the ground offensive If they do, then there is a possibility this conflict may actually widen beyond the Gaza Strip. Okay, over in the precious metal, we can see a bit of a pullback in gold prices. Again, on the same principle that there was a somewhat step down in tension in the Middle East. Price at 1,997 has eased back to 1,953.4 yesterday, and this is within the bracket of prices which I also highlighted yesterday. Somewhere between 1,945 to 1,955 could be an area where buyers may actually emerge. So for time being, although it does look like there is going to be an ease off in tension, do not be fooled, because over time you can see that gold prices has been rallying very, very strongly since the outbreak of the conflict in the Middle East, and this is likely to continue. So any pullback should be seen as a buying opportunity, in my opinion. Do not attempt to sell the precious metals at this moment in time. And over in silver, we also see the same thing. We saw a silver pullback from $23.70 to $22.66 overnight. And again, this is within the bracket of prices which I previously has also identified as potential area where buying interest may re-emerge. That level is $22.58 and $22.79. Okay, do watch out for further rally going forward. Now, the outliner is, of course, Bitcoin. Bitcoin rallied to a new high at 35,264 relative to the day before. We have a 35,027. Now we have a marginal high at 35,264 and 0.90 cents. So this is laying the groundwork for further rally in the Bitcoin prices. If we do see a pullback, any kind of pullback, especially in the three-wave equality pullback, will give us a chance to actually engage the market on the long side if we have not already gone long. So immediate target is somewhere between 35,700 to 36,850. So do watch out for the possibility of another surge beyond 35,264. This is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow with another update. Bye-bye.